Well, I haven't done this in a while, so let me know if everything is functional. Surprise, surprise. It's your second favorite streamer in Technical Roundup. um, yeah, thought we should do a live one. Brexit Giza. Okay, sounds like everything's working. The insults are coming in hot, so I can only assume. Let me just do usual pop-out chat so I can see your insightful commentary. And yeah, hi everyone. It's been a minute, as our American friends like to say. I always find that idiom strange. It's been a minute to express the idea that it's been a long time, but a minute isn't a long time. Perhaps if your attention span is only useful for TikTok, where it's like 10 seconds, then a minute might be useful as a proxy for a long time, but it still seems to me to be a strange idiom. But what do I know? And the answer is not much. Apologies for missing the Tuesday newsletter. Don was unwell, and he still is, so wishing him a speedy recovery. And also, him and I kind of spoke very briefly, sort of what should we write about, and there really wasn't much to say because everything was at monthly resistance, just like the week before that. So it was like, okay, well, cool. Do we just send something out for the sake of sending something out? And thought that would be a waste of everybody's time, so we didn't do it. Hopefully, Monday Markets was useful because we spoke about monthly resistance and stuff is red, and stuff is red from monthly resistance, so hopefully not too disastrous as far as your portfolios go. But yeah, we'll just have a chat. We're going to try to sort of create some hideous amalgamation of the newsletter, Don's Wednesday stream, and Altcoin Thursdays, and kind of just go over everything, really. And then we'll see if Don is well enough to do the Friday live stream, our casual Friday episode. Hello, Don. What happened to your voice? Yeah. Let's all wish Don a speedy recovery. He told me himself that if your video gets a lot of likes, I will recover much more quickly. That's definitely something Don would say, so I'm just passing along the message. Yeah, I'm not a huge fan of live streaming nowadays. I used to do it very consistently in like 2017, 18, 19, but I sort of gradually got bored. And also, I just assume that I'm an idiot who has nothing interesting to say. So whenever I make technical roundup content like Monday Markets and Altcoin Thursdays, my whole thing is don't get distracted. No one wants to listen to you. Just get in there, present the information, and go away. No extra time. Maybe that's wrong, but that's sort of my operating assumption there. So that's why sort of these free-flowing, live streamy formats, I assume it's just rubbish coming out of my mouth for the most part. So I don't burden you with that, for lack of a better term. So I think we should, for the benefit of the YouTube audience, do the fun bit, which are the lines on the charts, and then maybe at the end we can have a bit of a chat, some more casual stuff, and kind of catch up, because this doesn't happen particularly frequently, so why not? Any new additions coming to the technical analysis series? Yes, a shit ton. I've just been too lazy to do any of them. We actually love hearing you talk about how you haven't taken a trade yet. I think I got like either 4 or 5 winners in a row in this range, but they're all very short-term trades. They're like sort of hourly time frame rotations within the range. So I don't think that's terribly interesting. Like, it's very interesting when Don trades because they're huge swings and you can see them on the chart. Whereas for me, it's like, okay, this level, boing, okay, I'm out. And you know, that's far less sexy. I also don't like tweeting about that type of stuff because when I'm in a position, I don't even reply to Discord messages. I'm just very dialed in. And then if I start posting hindsight stuff on Twitter, if it's not educational, like a couple of those trade reviews, it's just cringe, to be honest. And it also attracts the type of audience that I don't particularly want. certainly for Twitter, where, you know, you post like an idea and then every 10 ticks, you'll have someone begging you for an update because they went 1000x on Rollbit. And I'd rather not have those people. What happened to the newsletter this week? We skipped it because Don was unwell, and also we had nothing to say because the market was still at resistance. But I'm sure the next one will have more to say. Anyway, I'm going to stop looking at the chat and start looking at the charts. Okay, so what's happening? Well, as we spoke about on Monday markets, we are at monthly resistance. So this sort of reaction, hopefully, for those of you who watched that video, isn't completely shocking, or at least weren't totally blindsided by it. In terms of the monthly picture right now, there are 3 weeks left, so it's still reasonably early to tell. But the level has done well. In terms of the available evidence, we've spiked previous month's high, and we're trading below the monthly open. So this is, you know, a clear case for a monthly rotation is beginning to emerge. Straight off the bat, if this is going to be a monthly to monthly rotation, the monthly support comes in at 20.5k. It's this entire candle consolidation cluster thing at 20.5 to 19.4 at an extreme if it gets really dicey for some sort of wick. You can see even if you go from range high to range low, the midpoint cuts straight through that at 20k. So you've got like an all-important confluence area at 20, 21, whatever. Basically some version of the summer range that we broke down from and then reclaimed. And that's kind of it. I mean, you could literally just use that to get some indication of what's going to happen. But of course, we like the lower time frames, so we're going to take a look at those as well. But I think the monthly is very important. You know, if the monthly resistance is giving a reaction, there's at least a chance that it's going to take us from monthly resistance to monthly support. So if that's going to be a kind of time frame aligned rotation, where it goes monthly to monthly, weekly to weekly, daily to daily, hourly to hourly, whatever, you want to have some understanding of where support or resistance or the next level on the same time frame is. I just ended a sentence with a verb. I'm terrible. Anyway, that's the monthly. If we look on the weekly, it's more or less the same picture, and that's again why we started looking at the monthly time frame with a higher frequency, is because it sort of encapsulates and incorporates all the weekly and daily levels as well. So if you know where the monthly is at, you know where the important levels are, and you probably have a bit more patience in sort of letting the market get there, or simply in executing setups, because you know that if it's a higher time frame level, you may have to give it more time to actually churn, chop, consolidate there before giving the requisite reaction. Just like we had at monthly resistance, we really spent a bit of time there. But if you know it's a monthly level, you're more open-minded, hopefully, to giving it more time and the time that it deserves. So, and I've got a whole video on the Cred channel about timeframes. That might be useful if you have no idea what I'm talking about. But even then, on the weekly, as we discussed, there's this weekly range high. We rallied into it, and we're reacting to it now. So up here, we were talking about monthly resistance, weekly range high, S&P resistance, dollar support. I mean, there was just a lot of source, which is a technical term for resistance, going on here. So as far as the weekly goes, we know that this sort of 19, 20, whatever market structure level is all important. If that fails, every single, I think, bullish argument essentially goes out the window, because all of the bullishness is predicated on the summer range reclaim in one form or another, whether it's the market trading above where FTX exploded, or that the market shouldn't have dumped below 20k. That was the bottom. FTX blew it up and we reclaimed it. You know, one way or another, technically, narratively, fundamentally, optically, it's basically this reclaim that has given a sort of medium-term bullish bias for continuation. So if that goes out the window, we're left with nothing. Because if we look below, there's nothing here that I would personally want to rebuy. We didn't spend enough time here. There isn't enough candle structure here. Compared to previous bottoms, it's just not the type of consolidation that offers much promise. That's why we have to hold levels above it, because if we go back there, for my money, on a higher time frame basis, there's no support at that point. And even if there were some support, the signal, the sort of relative importance of losing the summer range reclaim would be far more bearish than any bullish arguments at this mid level. Now, if we look on the weekly, I think we can slice it up even further. And I will delete some stuff. One thing we can do is the following. I think this might be helpful. So this is our very shallow pullback level. I know Don has this on his chart, so in his honor, and he is still with us, to be clear. You know, I'm not doing some in memoriam live stream. He's on the mend. But this is the very shallow pullback level. If the market's particularly strong and shakes off all this FUD we're going to talk about momentarily, that's kind of the first level of support at 21.8. Then there's this weekly market structure level, getting into deeper pullback levels. Deep pullback level. Okay, it's still fine here. Market structure is still constructive, but it would mean that we failed the first weekly level. And then, oh my God, what is happening? Lol, can't believe Don is still holding LTC. Is he okay? That's kind of the summer range low, the absolute extremity for any, you know, this is kind of the last do or die type of structure. And while I do have this on my chart, I think if it would look pretty disastrous at that point, because the amount of stuff we've lost and everything else would look quite rough. If anything, should we go there, I wouldn't be terribly surprised to see some sort of this. But anyway, let's take this one level at a time. But I think if you want a weekly roadmap, for lack of a better term, that's helpful in my mind. Now, the daily time frame just covers a lot of this, and it also makes the case for the first two pullback levels and shows why the last one looks so scary. Because if we look at where the very shallow pullback level formed, is essentially at this range high consolidation here, which is some decent level. You'll recall we also talked about this cluster in one form or another. So there is some weight to it, at least for like short-term, more, you know, short-term bounces, for lack of a better term. That's okay. That's fine. I will preface it by saying that for my trading system, generally speaking, if we consolidate like we have here for like 3 weeks, and then, you know, the market was balanced and then breaks balance, I'm outside of very short-term trades, I'm usually quite reluctant to fade that. Because even if you get a bit of a sort of liquidation-driven mechanical bounce first, there's a decent chance that the market comes back to retest that same level. Whether it's a spike of the previous day's low or whatever else, it's very unlikely that even if ultimately the shallow pullback level is where the market finds support, that it just V reverses from there. I would personally find that particularly surprising. But that's still a daily level, we know, and a weekly level and all that stuff worth bearing in mind. The one that Don marked on Twitter, and the one that's particularly important for him, is the deep pullback level, this daily cluster here, between 21.2 and 20.6 or thereabouts. We know there's weekly overlap there. This is the weekly market structure level. In terms of kind of pure price technicals, it's one of those impulse, consolidate, impulse types of structures. And if you've entered a new trend in the short to medium term, you want those bases to hold. Because, you know, one thing you can do is think about what would the market look like if X level were to break or were to fail. You know, if this support for any reason pukes, then we've retraced like a whole lot of momentum at that point, and we'll probably start filling in some of these breakout candles. So that would look rather appalling. So ultimately, the oh my God, what is happening is Don still holding Litecoin level. If the market is as strong as it is believed to be, it really has no business coming back here simply because of the levels lost. You know, you'd lose the shallow pullback level, you'd lose the weekly market structure level, and you've retraced essentially half of the impulse in the first place. Now, it's still a fine level of support, but then, you know, it just starts getting particularly treacherous. I think this is the best one. For me, 21K is the best / most important one in one form or another. I'm not going to be one of those people who says, oh, everyone wants it, so no one's going to get it. I mean, that argument is trite and unpersuasive. But I think if you're going to expect momentum continuation and sort of the 3AC gap, Don's 30K target, so on and so forth, it's unlikely to originate from 19.3K. Even just psychologically, sort of 20K, I think, in one form or another, has to hold unless the market, basically, unless this is the top and we're fucked. I don't have any color to add on intraday timeframes, I don't think. I think even when we spoke about the intraday range here, the argument was essentially, well, you know, if it breaks down, the one level that has to hold is the 20K-ish consolidation, and we sort of generously and in a very self-serving way just kind of hand-waved this range low as being important, but I think ultimately it's a conclusion that I agree with. And if I were to play bounces from 19.3, it would only be short-term in one way or another. As far as reclaim type of scenarios go, so I think for ETH it's slightly clearer. For BTC, I'm open-minded to simply saying wherever it pulls back, if it gets back above the breakdown level, that would be a useful signal. So that's about 22.45k, whatever. Or if you want to be really conservative, you just take the pre-nuke candle and say that this is where a ton of the selling originated. If it gets back above there, right, that will be quite strong evidence. But that all falls around the 22k handle. So if you're one of those who's like, I don't know if it's going to be very shallow pullback, deep pullback, somewhere in between, the fuck off level, I don't know any of that. What would strength look like? Strength would look like reclaiming the breakdown. So if you're going to wait for that, regardless of what happens here, I think that's completely reasonable. So generally speaking, the way I look at these things is in the following manner. When high time frame break from balance and or rotation from high time frame resist, 2 options to position for strength. 1, breakdown invalidation. 2, market reaches deeper discounted levels of support. So we know we're coming off or coming from monthly resistance. So this first criterion is satisfied. 2 options to position for strength. Breakdown and validation. Where does that take place? 22.5, 22.6. It's still a bit of a tricky signal because it would still be in a monthly sort of area of resistance and the weekly range high. But at the very least, at that point, you'll have some way to define your risk. And you'll actually have some argument for strength that this breakdown from a 3-week range has been reclaimed, and that's something. So we know that on the daily or on the weekly or whatever candlesticks we get in one form or another, it could even be intraday, given how much all these levels are in concert with one another. If you get any type of reclaim, regardless of where it comes from, that will certainly satisfy point number 1. Okay? As for point number 2, market reaches deeper / discounted levels of support. This is essentially paying dividends to the idea that when you get high time frame rotations, you let them play out. You're patient with them when you let them reach high time frame levels. And as we discussed, in order to satisfy the areas that are capable of satisfying criterion number 2 are, if I can ever get my text back, good lord. Yes, very useful. Okay. And the levels that can satisfy number 2 are, if you're aggressive or early, it's 21.8. If it's something scary looking but ultimately better structure, it's 21k. And this isn't like a particularly huge zone in which to make that assessment. You know, it's basically $800 give or take. 800, $900 here. All of this is fine. Below here, it's far less fine. Okay. Does that make any sense whatsoever? Is that useful? Is anyone still here? No, we're almost at 100 likes on the video. You're also terribly charitable. Makes sense. Love it. When moon. Yeah, great. Excellent. Okay, cool. I'm glad something makes sense. Yeah. Sweet. I mean, this is the cool thing. We started with the monthly, but even down to the 4-hour, the levels are the same, right? This is our reclaim this level. It's the same on the daily, same on the 4-hour, whatever. And this consolidation in one form or another is our daily / weekly must hold type of thing. So that's nice. It's useful for all time frames. Click the like button. It's colorful and has a little animation. Completely agree. Hello, Don, my handsome king. I'm sorry to disappoint. I'm more the ugly pauper than I am the handsome king of this channel. Do you care about low volume on BTC in this move up? I do not. I care about the ratio of altcoin volume to Bitcoin volume, which has been very high, and historically that hasn't been the best indicator. But as far as Bitcoin volume on its own, no, I don't care. Don has been drinking all night. Could we sweep below the current must-hold level to liquidate longs and then resume? It's certainly plausible. Whenever you map out like a key level, there's no guarantee that it'll just come to the level and then boing, you make $10 trillion. It may often be the case that there's an attempt to break that level because of how much participation there is. And if that attempt fails, well, then at that point, you get a clearer invalidation. This is one thing that I've always found confusing. So you'll see often commentary based on levels where it's like, this is the support. And the argument will be, well, if it comes in and then, at this point, how do I know whether support is going to hold? Well, the answer is you don't. If you knew, no one would ever lose money. Or even perhaps more cynically, like if you know support is going to hold and you want to buy it, but the entire market knows it's going to hold, who's going to sell it if there was such a thing as knowing for certain the level is going to hold? Like, by definition, that's impossible, right? So then you'll have people who argue, well, okay, all you have to do is you wait for the deviation and then you long the level. But that's rather tricky because sometimes you just won't get the deviation. The market will just respond to support and rally. So I think this all comes down to people trying to avoid uncertainty and thinking, how can I be sure about XYZ? Well, you can't. You simply can't. You can't have a sure bet. You need the bet to be good enough. That's it. It needs to be good enough and risk managed. So what often happens is that, and this happens to me a fair bit, especially on the lower time frames, I have a level of support that I think will hold. I'll buy it initially. And then if it kind of stops me out and then prints a deviation, I have no qualms about rebuying that level again, usually with more size because I have a clearer invalidation and then taking a trade off the level. Like ultimately, does it matter if the market does this or if the market does this? Like it's still the same idea with a few percent, not even a few percent, a few ticks difference with the broader premise that you're expecting this support to hold. Whether it does so outrightly or does so with a bit of a trap, does it really matter? Does anything preclude you from trading one or both of those? Like, for example, if you only ever wait for the deviation, you're going to miss out on a lot of amazing trades that just hit support and fucking V-reverse and go straight to your target. And that sucks. In the same vein, if you only trade those tests, then sometimes the market will come in, stop you out, and then eventually reclaim the level and then moon. But because you were so stubborn and said, oh, well, it broke below, therefore my idea was wrong, you miss out on the leg from the level. Like, it's the same trade. I think people are committing a category error when they make huge distinctions between this type of price action and this type of price action. The idea is still the same, that this is that's where the market is going to reverse. How exactly it reverses is a secondary consideration that pertains to entry triggers, but they're not necessarily two different ideas. The idea is the same. It's a bounce off support. It's just a question of how long is the wick going to be, for lack of a better term. Anyway, that's just rambly stuff, but that's sort of what makes sense to me on BTC. As far as ETH goes, not too dissimilar given higher time frame structure. This was the monthly range high we discussed ad nauseam, 1680s, and that's where the rotation is coming from. On the weekly time frame, so I still find this build-up of lows to be rather uncomfortable. We spiked the first one and are bouncing a little bit. I wouldn't be awfully surprised if we poked and prodded the higher lows that aren't too far away from it. So again, to visualize that on the intraday, we've poked and prodded here. There might be a bounce, just kind of a more mechanical bounce as a result of that. But it wouldn't be terribly surprising if the market were to poke and prod and see what's hanging out at all of the lows in the consolidation, as opposed to just this first one. But for the time being, it's your standard spiky type of setup. If it rallies, I'd be conservative with how much how far it goes, rather. I would look towards the first area of structure on the intraday time frame, which is basically some form of this consolidation. That makes sense. Anything far beyond that, leaving these lows in, would be suspect to me. One other development I will note on the weekly time frame is that if the weekly closes like garbage, as the French like to say, for not very good, so that would look like this, for example. If we get, close above, close above, close above, close below, I would expect that area to act as resistance in the following weeks in the short to medium term. So that would be a very rough weekly look. However, looking forward, we know that double fake out setups aren't terribly common. Hopefully that's one thing that you've learned from my part of the channel, if anything. So if this is our weekly level, if this ends, again, weekly close still has 3 days left, yada, yada, yada. But if this ends up being a deviation, ultimately, whatever shit happens down here, if it comes in and closes above again, we'll know that we've already had a fake out on the weekly, and that the next attempt at acceptance or weekly close above or whatever is most likely real. And then I think we go for the double top for the highs and so on and so forth. So this is just like sort of Bitcoin at whatever it was, 17K, or I forget the exact level, where yes, in the short term, it really sucks if you get a failed breakout, because then you're like, oh, this deviation, now it's going to go down, whatever. But in the future, these make for some of the absolute best levels to trade, just like Bitcoin was here on this double fake out, 17.6. So yeah, the failed breakout sucked and it led to some shitty price action, but the trade that was the future trade that was created as a result was phenomenal. So even if we get a garbage weekly close on ETH that closes through all these lows, engulfing fuck off candle, whatever, you should still have this level in thick red on your chart, something like this, because there's a very high likelihood that there's a banger future trade to be had on that. Of course, it would still be resistance in the short to medium term. As far as the we have a lot of pivots for Bitcoin monthly. I think they are less compelling on the ETH monthly. There are some good weekly levels though. I think, again, in the short term, my focus is on basically seeing what happens to this higher low stack. I really don't like these types of stacks. It just makes me very uncomfortable. Whenever I just trade those SFPs, there's always another one right nearby, and it just gets a bit messy. So as far as other weekly levels go, we have this at 1590, which kind of sucks. Don and I kind of ranted about this, but it is what it is, as the kids say. There's this kind of triple higher low nonsense we're paying attention to. But as far as weekly structure, the next sort of big visible pullback level, if this continues, is at 1420. No, that's not the blue I wanted. There we go. This is the most important part of trading: your color schemes, line thickness, colors, and so on and so forth. But yeah, that would be the next weekly level. So again, if we're open-minded to the assumption the market's going to move from monthly to monthly, weekly to weekly, so on and so forth, if this ends up as a weekly breakout, or failed breakout rather, the question you must ask yourself is, where is weekly support? And for me, it's at this 1400 level, which is also the prior all-time high, and all sorts of other nonsense. Well, it's not nonsense, at least I hope it isn't, but that's sort of the next level. And again, this is the weekly level, so the question is, if the weekly time frame is going to have a wick, where might that wick reasonably end up? Well, maybe towards the top of this value area here at 13. Go away. At 1370, 1380, so on and so forth. This as a weekly pullback structure. The final level I'll add on the daily is this one, something we covered on Monday markets. It's the sort of former range low, bit of a messy SR flip thing at 1500 or just above. And so if you look at ETH, right, the range high is rather clear because we know this was monthly resistance. Now, where is the range low? I think even if you're being conservative, the range low is the lowest close within the consolidation at 1500. And so there's a fair bit of confluence here as far as the reason why I'm not stepping in front of this SFP is because it's not at daily structure. And I think if it hits the daily range low, you might be in a situation where you get your triple spike into an area of support. And so I'd much rather trade at support with more spikes rather than just in front of support with one spike, right? Cred, are you a minimalist? Absolutely. My general view on complexity in trading systems is that it's best applied in the minimum effective dose. Because more complexity is more variables and more synergistic effects you may not be aware of, and just it's harder to troubleshoot problems and to diagnose them and fix them, and adding complexity to your trading systems alters all types of decision trees and how you execute trades and manage them and so on and so forth. So for me, complexity is the minimum effective dose always, and avoid as far as reasonably possible. No, I meant in life in general. Maybe we do that after the charts. But yes, that's sort of what makes sense to me to ETH. You know, even if we take a very cursory price action view, this is the range high. Where is the range low? Well, I think it's here, and we're not quite there yet. How old are you? 26. I mean, even intraday, right? Kind of range high, range low. We're coming from the range high, puke through the mid, which I think is around here. This to me is a bit front runny. $26, still hope for you? Good heavens. Hey, Cred, I lowered the leverage and moved to more high time frame, and it's so much easier and less stressful. That's wonderful to hear. I think your trading portfolio will thank you for that. So yeah, that's ETH, right? To recap, we're coming from monthly resistance, and that's something I take seriously. In terms of the weekly, we're pending the weekly close, but if it closes below this highest close in the short to medium term, that would signify a weekly failed breakout, and I would expect some resistance there on a retest. In the future, we can trade the double fake out structure, and that has a very high strike rate, but in the short term, if this closes sort of like this, the weekly starts to look a bit shit for the next 1 to 2 weeks or whatever. As far as structures that are sort of pertinent now, it's this triple higher low nonsense that's visible on all time frames. And if you're looking for larger pullbacks, I think 1400 is the big boy if we're going to get a big boy rotation. If you're more short-term oriented, looking for potential range low bounce mean reversion, it's at 1500 in one form or another, ideally in a way that spikes a lot of these boys and at least gives you something clear as far as risk. Does that make sense for ETH? Do you believe MSS, BOS, the inner Jesus Christ. You know what? I'm just not going to answer. The only thing I'll say, if you're particularly impressed and obsessed and concerned with the specific nomenclature surrounding price action trading concepts, as someone who's been very deep down that rabbit hole many years ago, I would lightly caution you that it may not be as productive as you think, or in terms of framing the market as someone is in control and it's designed to do X, Y, Z, and it's going to move to stop out this many people, and it's all very cleverly engineered and manipulated. I think that may make you sound intelligent, at least in your own mind. I think to most reasonable people, you would come across as conspiratorial at best. That would be a charitable interpretation. But if you're concerned with your development as a trader, as opposed to sounding like your third eye is open or whatever it may be, I think how price moves is more important than why price moves. I mean, the why ultimately isn't going to pay your bills, but the how and the pattern recognition associated with that, and the replicability and the patterns and all that type of stuff, that's what's going to drive your trading. Not, oh, is it a fair value gap, or is it a liquidity thing, or is it an inefficiency? No, it's not a failed breakout. It's actually a stop hunt liquidity pool. Like, get your fucking head out the gutter. Anyway. Hopefully that makes sense for ETH. So most of price action trading, so this is the issue. A lot of price action traders are deeply insecure, like deeply, deeply insecure, because they look at how other market participants operate and they have fucking degrees in maths, they're quants, they have algos, they write shit you don't understand. And so instead of seeing that as a meritorious thing, that hey, my system is relatively simple and straightforward and intelligible to me, and most importantly, it makes money, and I don't need a ton of complexity in order to maintain an edge in the market, all of which is a good thing. Instead, a lot of the time, these sort of insecure practitioners, they think, fucking hell, I seem really stupid drawing lines on charts compared to all these quant guys, so how can I make my drawing lines on charts seem particularly complex and intelligent and like sophisticated, and create this veneer that I'm not just squiggling on a Japanese candlestick chart, but I'm doing something much more deep and something particularly profound. And then the answer is it just turns into sort of obfuscation with terminology. You take very basic, well-established price action terms and you start calling them all sorts of fucking random shit, and usually with a lot of acronyms to make it seem complex from the outside and to make it more inaccessible to beginners so that you may impress them with your perceived intelligence. So instead of calling it a level, you call it 10 different things, even though it all ultimately means the same thing. So I would generally say that don't shy away from simplicity in your trading approach or trading system as long as it works. And complexity should be added in the sort of minimum effective dose, especially at its core. There's nothing particularly new under the sun as far as price action trading goes. You can look at range traders. You can look at smart money, whatever the fuck traders. You can look at volume profile traders. You can look at supply demand traders. You can look at levels traders. You can look at order block traders. Bigger picture, to absolutely nobody's surprise, their levels will be very, very, very similar. And that's very telling. And even if they weren't similar, it's incredibly unlikely that the reason you're not making money in the markets is that your levels aren't good enough. Like, that's just not it, right? I mean, you can get the levels from Twitter, for fuck's sake, and you'll have the top levels of the brightest minds in price action trading, and you'll still find a way to lose money. So if you were to confront the question with any degree of intellectual rigor, that what's more likely to confer an edge, where exactly I draw a box, or B, how to actually execute and manage the trade and manage risk and be aware of market conditions, spot shifts in conditions, etc., etc. I think B is going to be much more productive. So if you find yourself enmeshed in this fake terminological battle of is it a level, is it this, that, etc., this guy draws his box like this, but this guy drew a range $2 higher, you may be distracted, I would submit. I just tuned in for the first time. Can you back up to level instead of this BS? Bender Rodriguez, how about you suck your mum? There we go. That's ETH. I think we should take a look at some altcoins now that we've done BTC and the Ethereums. Also, to be clear, like if you don't like the free-flowing stuff, every Monday I put out a 10 to 20 minute video, which is pure levels commentary in the most concise format. You'll probably find it anywhere. You can also just skip parts of this video if you're watching on YouTube that you don't enjoy, to parts where I'm drawing. So, yeah. Something for everyone, eh? How old is the duck? A few years older than me. As far as the altcoins go, I don't like BNB here. And the reason for that is, as you'll recall on on Altcoin Thursdays, we talked about this range high and the probability of a double fake out being relatively low. And this just turned into Wick City. When double fake out setups work, you usually just get a strong close above and then continuation straight off the bat. Here, it just seemed to get stuck in the wicks, so you didn't even get a close above the highest price point within the range, and then just churn, and then a bunch of BNB news now related to Paxos, which isn't helping. So, you know, I don't think this is a particularly good example of a double fake out setup, because usually those just close above and then vanish, just like Bitcoin did here, close above and teleport. If you're not seeing this on a double fake out setup, then it's not a double fake out setup. So this just got very choppy and churny, for lack of a better term. And I don't really like the current structure that it's trading within, because to me, this is a sort of inefficient, grindy compression type of price action. And I like my supports built sort of more diagonally with clear clusters of delta, as opposed to horizontally with thin compressed price action. So nothing here that I find terribly exciting as far as BNB goes, unfortunately. So yeah, I just don't like this structure. Ape. This would be a rather unfortunate weekly close if it continues, because it would suggest that this market structure level range high thing was not successfully reclaimed. And that would be rough, especially after putting in a couple of spiky boys at the extremity. If you're looking for shorter term pivots, I would simply box out the pre-breakdown range / consolidation. And that would probably be relevant for any argument for strength. Back above there, fine, acceptable. At that point, the weekly looks more repaired, and then you have some sort of invalidation on your daily below the then reclaimed range low. But otherwise, yeah, no, not great. As far as, you know, if it keeps pulling back and you really like Ape, I don't know, man. Like, I could pull something out my ass, I guess, which would be some version of this pivot here. Seems pretty important. At least the market has historically cared about it. So your big scary pullback level is 430 to 450-ish. That's fine, and there isn't anything below that, so that's a decent enough daily time frame line in the sand if there's any acceleration. So the two daily levels I'd have for that is this big pivot boy, which I'm sure you can refine because I made a dog's dinner out of it, around above $4, and then your resistance range low pivot is at 5.5. Zapdos, daily cluster. That's it. That's the tweet. Daily cluster. So if this consolidation fails, it's fucked. It'll probably backfill the breakout from this consolidation. Again, this whole thing was impulse, consolidate, impulse, consolidate, impulse, consolidate. I did that completely the wrong way around, didn't I? Good heavens. Impulse, consolidate, impulse, consolidate, impulse, consolidate, impulse, right? So when you get that type of structure, you don't trade the thin legs between the impulses. That's bad. You trade the clusters and the consolidations themselves. Those are the levels that matter, not the thinner areas and the breakout gaps, if you will, in between. So if you like Aptos, you're hoping for $12 in the short term to play any bounces from. The way I like to... There are kind of two entries I tend to take around these sorts of structures. The first is at the range low, because this is a range, right? Like, I've drawn a box, but ultimately this is a consolidation, therefore it's a range, and therefore it has a range high and a range low, right? Hopefully we can agree on that. And so within that type of structure, I don't like to diddle in the middle. So the midpoint of that, the point of control, whatever, is not an area where I like to do business. I like to do business at the extremes. Typically, the way this will work is if I get good daily closes at the upper boundary, often, but not always, I will look for a move below previous day's low. In that context, whether it's the candle that closed above it, oh, sorry about that. Whether it's the retest candle or not, I want to see a move below previous day's low, and then that defines my risk, and then I just target the daily first trouble area. So that's usually reserved for the range high. If it's the range low, I'll almost always wait for some sort of wick through that lower boundary, and then any type of lower time frame reclaim setups are good to go there with risk defined within the parameters of that setup. Sometimes a daily open strategy is also fine. Like if you get a really good daily close here, whether it's today, tomorrow, whatever, and you think, okay, that's probably it, then just trading a daily open strategy after you've had the bullish candle close is also a good way to go about it. But in any case, if you're playing any bounces on this, has to be something clear from the upper boundary, something clear from the lower boundary, not at the midpoint. And then I think if you're buying the lower boundary, your first trouble area is the upper boundary. If you're buying the upper boundary, your first trouble area is the breakout, pre-breakout level, or pre-breakdown level in this case. OP. I mean, this is just a really good example. Same thing, right? Range high. Fine. Range low. Don't diddle in the middle. If you get good daily price action at the range high, that's good to go, really. First trouble area is just, again, very conservative, the point of breakdown. Technically speaking, if you start getting closes below the lower boundary, upper boundary rather, you just target the other side of the range and don't diddle in the middle. But I mean, this is also reaching support. Thankfully, instead of covering a million different entry triggers stuff, I can just point you to the entry triggers video on my channel, which covers exactly what I'm talking about. When I squiggle and say something like this or something like this, whatever, I actually talk about what that means and what it looks like. And there's also a top-down trading video. I think it's called top-down analysis or something on the Cred channel, which covers this with some length as well. So yeah, that's good. The thing is, right, so a lot of content you consume will no doubt resemble something of the following, or the following in some form. So they'll have a level, and then the market may be somewhere here, and then they'll draw this, and then eventually the market does like this, and then they'll just, you know, smiley face, nailed it, whatever. Now, that's useful, but not in the way you think. It's useful because the people posting that have been generous enough to share with you levels that they think are important. And there's a lot you can learn from that. I remember trawling through years of Trader Dante's tweets going back to the 2000s when he would just tweet out FX levels, and I would go back to Euro USD, GBP USD, dollar yen, etc., and draw those levels for myself to figure out how the fuck he was getting them. So there is something to be said for, I mean, squigglies or whatever, you know, the Trader Main classics and so on and so forth. They are valuable, but they're valuable as far as level selection goes. They're far less valuable as far as trading execution goes and entry triggers. Unfortunately, the level selection part isn't that important, and the execution part is everything. And so a lot of the time, when people start live trading, if they're used to like calling the market with their squiggles, once the market actually gets to their level, they're like a deer in headlights, absolutely no idea what to do. And so that's where you should be spending most of your time, to be honest, as opposed to looking at which levels to pick. It's what are you gonna do at the levels that's gonna pay your bills, rather than charting them correctly. So yeah, OP. Range high, range low, first trouble area. Do you think technical analysis series by Cred is enough to achieve your trading style? I mean, we'll end up in the same neighborhood, and stuff I say should be ultimately very comprehensible to you. Same trading style. I don't know. I'm sure there are a ton of quirks and little nuances that I've picked up that I haven't conveyed formally in video form. Also, there's still a bunch of content planned for the Cred channel that I haven't gotten around to doing yet, so some stuff is missing, but I think it's a very good thing. Like, the foundation's there, you know? Phantom. Same thing. Weekly structure here. Not quite there yet. Bit early for me. Bit early. You could make an argument that, oh, well, isn't it at the daily cluster? Which is a okay argument. I think if it gets above the upper boundary, then that argument becomes more compelling. Generally speaking, I have a really rough track record with front running my own levels. It doesn't end well. So I'd rather miss a trade than front run my own levels. So if I miss a trade, like fine, I haven't lost any money. But front run my own levels, Christ, that's historically hasn't been very charitable to my balance. I mean, is this thing still? Yeah, cool. So my God, Solana. Yeah, the weekly reclaim failed. That's it. That's all she wrote. The weekly reclaim failed. You might get some sort of spike reaction from this low for something short term, but ultimately, that might offer a mechanical bounce of sorts into low time frame trouble areas. But bigger picture, yeah. Ugh. I mean, bigger picture, if there's going to be like the next area of structure that isn't sort of a mechanical bounce would be the former range high here-ish around $17 or thereabouts. But I don't love it, if I'm being completely frank. I think the better idea is, whenever that may form, a clear weekly reclaim. And I think fishing for a higher low within this range, maybe it becomes clear in the next few days or week or so. But I don't really love these levels. Like, I kind of just look at it on the daily and think, this range high is a bit thin for my liking. Yeah, I don't know. This is one of those where, I'd much rather do that than start fishing here. But what do I know? Not much. Not much. How long have we been going for? Oh my God. Too long. Too long. At least leave a like on the video. Look at me, what I've become, begging for likes. 11 o'clock on a Thursday. And I'm here live streaming, talking to myself in my room. Anyway, Matic. Spiky boy at the high, cool. Similar to BNB, I don't really like this diagonal upsloping structure as support. It's not my favorite. There is one weekly level that I actually like on Matic. God knows if I'll ever get it. But it's essentially at $1. So it's one of those double fake out now support levels where you had clear range high, failed break, and then we moved off from it. So if this thing pulls back on the weekly, that for me is very important. On the daily, the fake out portion is rather messy, but ultimately it's quite clear. Support, clear range high, this is the mess, nice horizontal structure, and then breakout. So that would be spicy. Anything else is not for me. Not for me. Yeah, Spiky Boy, if it wants to come to the weekly, cool. Otherwise, I'll just let EXO trade it. AVAX. I think we had some sort of daily level here that ended up crushing the market. I don't remember where exactly it was. I'm just going to assume it was around the Pico top. How fucking self-indulgent and arrogant is that? Good God. See, this is what a lot of alts look like, right? So they had a breakout, which is cool. They impulsed, and then they formed this hideous diagonal compression, and then they impulsed again. Now, contrast that with impulse, clear range consolidation, impulse. To me, these structures are valid supports that you can trade. The compression diagonal stuff is garbage. So, but a lot of alts, unfortunately, look much more like the first one than the second one, which means ordinarily, if they start to fill those areas, just like they didn't do much on the way up, they usually just get filled quite easily. The market sort of gaps through them on the way down before hitting a more meaningful diagonal structure. And that's what a lot of alts look like. And even if they offer like, short-term bounces, that's fine. When the market does this, this type of thing, with this diagonal leg in the middle, as opposed to like something horizontal and a real range formed. I don't like it. I don't like it. So, post impulse. Range, visible range / sideways with horizontal structure equals good. Garbage, grind, diagonal, compression, nonsense equals bad. Good night, David. Yeah. Ugh, look what they did to my boy. This is what happens. Don is away for like 3 days, and the market just collapses. What's going on with alts? This is crypto, for the most part, is one big correlated basket of shit. And when the big boys start to puke, all this garbage, would-be collateral just gets yeeted along with it, is the delicate explanation. DYDX, I think the weekly close here is just going to be, is probably going to be the clearer idea. Because if it closes anything like this, below the level, it's probably stuffed, at least towards the midpoint. I don't know what that is, what language that is. At least towards the midpoint, if not the range low. That would be a pretty powerful signal. So I think this is one of those where waiting for the weekly close is acceptable. If it's going to keep looking decent, what you want to see during the course of this week is for the weekly close to get rescued. Now, how would that look? Well, you'd expect, if that were the case, this daily cluster to hold. And then in one form or another, the market starts finding acceptance back above the weekly level. And then that would also define your risk, and you can trade the rotation higher. Range higher is your first trouble area or the pre-breakdown, and then maybe continuation if the rest of the market recovers. The conservative way to trade that is just to wait for the weekly close. If you want to be cheeky and short term with it, it's this daily cluster and whether it's good enough to rescue the weekly, where you'll probably find some setup. Yes, good night. Sviatoslav. Alessio Giampaolo says this is the best TA channel ever. I disagree. I think CryptoCred is the best TA channel ever. Wink, wink. No, I'm joking, obviously. Thank you. Light Ponzi, also known as Duckcoin. So this just needs to go to 0. Because I'm tired of making reasonable, grounded, informed trading sort of points that would apply to 99% of people and is, on average, very good information. And then Don just throws it all out the window and ignores it and prints gigatrillions of dollars. I am sick of it. So I'm joking, obviously. I love the duck. But yeah, the light Ponzi is reacting to weekly resistance at the 100 handle. Range low, range high, range midpoint, support turning to resistance. Fine, nothing terribly shocking there. I think on the weekly time frame, and Don himself conceded this, the first real support, if this thing continues, is at 76, which is some bit away, and that would be kind of a rough-looking chart. On the daily time frame, it has been rather good at flipping all the breakout levels. So it doesn't look disastrous as long as that continues to be the case. You could make an argument that it's already failed for the first time at 94. I think that's a reasonable argument. So this 94 to 101 pre-breakdown candle is now your daily resistance level. Right? You've got the weekly range high and the daily pre-breakdown cluster as your resistance. And generally speaking, while yes, we could start to superimpose levels on this thing as support, and I think in the short term that's fine. The way I look at these things is if I'm getting higher time frame rotations, I don't generally buy the first support below those levels. It's in tandem with the idea of giving the monthly a chance to go to the monthly, giving the weekly a chance to go to the weekly, giving the daily a chance to go to the daily, so on and so forth. I'm generally reluctant to buy the first level immediately under it or immediately above it. So, and I think in any case, trading the continuation on the upside towards the midpoint and the range high is a much clearer trade than basically trying to knife catch this thing in one form or another. But yeah, short-term support stuff, obviously, but I sort of give precedence to the weekly. XRP, no thank you. Cardano. This is a pretty good example, actually, of this thing I pointed about, how you get diagonal legs after impulses that I don't like. This is a lot like that. So you have the impulse, and then you have the mini range here, but this kind of slopey price action I really don't like, which is why it gets filled with ease like your mum on a Friday. Sorry, like the price action we're seeing in front of us. So, yeah. I mean, this isn't top of my watch list anyway. I just kind of have it here. You know, I don't remember the last time I traded Cardano, to be honest with you. But yeah, I'm just going to let it do its thing, to be honest. Nothing terribly compelling there. Dogecoin. Ugh, no, I'm not doing it. No. I mean, this isn't the word. Well, basically, this is an okay cluster, and the same considerations would apply. Through the range high is fine. Something defined at the range low is fine. But if that fails, it's probably just going to backfill to this entire pre-breakout consolidation. So fine. You know, I think for short-term punts, there might be something here if you know your setups, because this is a rather clean range. I'm not going to diss it, right? This isn't one of those messy diagonal compressions. This is rather good. So if you're looking for short-term trades, I think this SHIB range might deserve a bump up. On the old watch list, Tron, no. Oh, no, never mind. I take it back. Tron is interesting. And it's interesting because we get to look or plan for a potential future double fake out. Because if we take this weekly level, specifically given it's an altcoin that wicks a lot more, if we're generous and take the candle close as opposed to just the highest close, the lowest close, if you look at this price action, this was the deviation, right? Clear support. Ah, we're fucked. Never mind. It's reclaimed. We know that it's already had one fake out. So if it starts accepting below, it's unlikely to be a fake out once again. And then I think you have a rather clear target in some combination of this range high with this cluster. So any weekly close back below the structure, double fake outs aren't terribly common. I think that would be a continuation setup to fill in a lot of this impulse candle and just take us back towards the pre-breakout range. So that's interesting to me. It's not a support I want to rebuy particularly either. I mean, it's yeah, no. I think the weekly is better on that one. Uni. No, I mean, no. 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 Nope. Exasperated sigh. Do magic? I'm not a magician. Oh dear. Link, it's just garbage. XMR, no. Ethereum Classic, what? You know what? Go away. Near. I'm so cynical about these. Weren't they the ones that announced they had some magic AI fund thing today? I mean, talk about desperation, right? Chat GPT, whatever the fuck it's called, is traded this SFP, obviously. But no, fine. I mean, you could just use it as a range, and maybe there's a short-term pump there. That's relatively clean for intraday trading. That's okay, but yeah. LDO has a very clean weekly chart, like very, very clean as far as directional bias and just where the market is. Highest close range high, lowest close, range low, and it's just been getting stuffed at the range high. Don't diddle in the middle, which is where a lot of this price action is. I think if you are going to diddle in the middle, I would premise any ideas off of this daily consolidation. Nice little range low that's been relevant. But, you know, this is on my watch list and something, you know, if the liquid staking... I don't know how much steam the liquid staking derivatives Super Soaker 3000 thing has, given all the ETH criticism. And the speculation about security status and all that type of stuff. But I mean, this relative strength is insane. All this shit is down double digits. This is down 2%. So, yeah. Filecoin. Yeah, I had a friend who unfortunately went to prison who was really into Filecoin. We called him, his name was Peter File. But anyway, I think that, yeah. So look, again, if we just take the daily time frame at face value, any close through these market structure levels would be shitty, and I'd expect that to be resistance in the short to medium term or whatever. I think the only area that stands out is actually this cluster. So this is like a good example of a sort of horizontal consolidation. We have impulse, consolidate, impulse. And it's like, well, what does the inefficient one look like versus the one you like? Well, this is a really good... I mean, this is about as rangy as it gets, right? So that to me is cool. If you want a pivot for Filecoin, this range in one form or another in a zoomed out version is it. So that's interesting, especially, and again, I've boxed out the whole thing and it might seem offensive, but it's really the upper boundary and the lower boundary those are the relevant ones. So yeah, that's cool. That's interesting. Algo. No. H-bar. I mean, very interesting pre-breakdown range thing going on, but it's not there yet, right? It's not there yet. Even if you look at it on the weekly, the pre-breakdown range high, range low, that's interesting. But it just feels a bit premature. Relative strength is interesting though, but nothing here. Vet. No, fuck off. Mana. Nope. Oh no, this is Stan. No, fuck off. Sand. This just feels like one of those one-day news catalyst pumps that's fully retraced. I don't know if there's any reasonable metaverse narrative thing. I think this is entirely headline driven, and then you also get a sense for the state of the market, given it's fully retraced now. So I don't want to be the exit liquidity on this for any news buyers. So. And also, again, to be clear, when I'm going through these charts, I'm only looking at stuff that's very interesting and or educational. I could, of course, do the thing where I go through every single one of these and just map out levels somewhere and say that, you know, oh, well, this is resistance and this is support. And if it does this, that's fine. If it does this, that's good. And then if it does this, that's good. If it does this, that's less good. If it does this and then goes to the mean and deviates that, that's bad. But if it does this and goes above the mean and enter the range high but forms a higher low and then above and retests the range high, that's like, let's not do that. I think you're all intelligent enough to understand the basic price action range bound stuff that we've covered ad nauseam for years at this stage. And there are videos on my channel and everything else. So for any of these, you're all smart enough, if you want to short-term trade it, to look at where the extremities are and trade the extremities, be that spikes or range plays or failure to accept, all that type of stuff. But I'm not going to sit here and waste your time with that because you know it, presumably. And if you don't, go learn it. And there are resources for that. Tezos, how did you get on my... Nah, mate. Come on. Taking the piss. FXS. More relative strength. Again, interesting. I'm going to bump a couple of these up because the relative strength has my attention, for lack of a better term. It could just be lag, but it doesn't hurt. Cred, do more live streams. It's fun. No, I'm losing my sanity. Absolutely not. This is like once a year. Chili's again. Catalyst, full retrace. I don't like trading off the back of those. Not my favorite. We could do the usual nonsense: range high, range low, etc., 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 etc. But let's not, because that's a waste of everyone's time. Curve. No. I mean, yes, but no, because, like, again, oh, it reclaimed the range low, you target the range midpoint, yada, yada, fine, great. Like, we know all of that. Surely we know all of that. No, it's not fun. It's too fast, no chill. Too bad. Not interesting. No. No. No, didn't do anything for weeks, months, years, perhaps. Hook. Line and sinker. This is one of those like listing launchpad breakout ones. I think your last meaningful level of support is this kind of listing high and range low at $2.50. Anything below that, it's absolutely stuffed. For shorter term trading, that's kind of your last bastion range low, so it might be interesting. Right? Might be interesting. Legacy. The FUD here hasn't been helping much. It doesn't look terribly scary yet. I mean, VIX has been crushed, but contextually, we're still monthly resistance here, and then weekly here as well. So no saving graces there for the time being. Same with NASDAQ, weekly resistance. Dollar, less important, but did respond positively to the range low. I wouldn't be surprised to see another push to really test the range high / breakdown level here in this area. Any questions? Was this interesting, enjoyable, useful? S&P, we've just done it. Can we have a look at ETH BTC? Oh, I don't even know what this level is, but apparently it's good. Oh, it's like a local range low weekly thing. I mean, I don't know. I've seen a lot of strong cases made either way for ETH BTC, but it hasn't done anything for a while. And then even if you don't like agree with this look back period, it's still been in the same range since like September and hasn't done anything. And it's right at the mid. So I don't know. Not terribly keen on reading deeply into that. I'll stick around for some questions and then go away. But yeah, like, subscribe, yada yada, do all that stuff, and then we'll just have a chat now. How do you see correlations between crypto and S&P 500? Still, my rebuttable presumption is that they are positively correlated until such a time that I see strong evidence to the contrary. Ideally, multi-day or multi-week inverse correlations or secular trends or something like that. Do you think the echo bubble is over? I have no idea. I don't think of things in those terms. I just think in terms of levels. And we're moving from monthly resistance. Do you pay any attention to EMA bounces? Tangentially, but not for trade ideas, just to get some understanding of what higher time frame sort of mean reversion systems look like. Do you sometimes 100x leverage just for fun? No. I stare into the abyss for fun until such a time that it stares back. Can you explain the importance of speed in situations? I generally like momentum into my levels. I'm very scared of fading drifts. I'd much rather fade momentum into levels that I have conviction in. or areas where I think a reversal or a reaction is likely. Because if there's a lot of short-term momentum, there's also a decently high likelihood that traders who are very short-term oriented are going to chase that and execute at bad prices for them into good prices for me at important inflection/reversal points. So a lot of the time, big, scary-looking candles into reversal zones I quite like to see, because there's a good chance someone there is going to get sloppy with their execution, as opposed to just drifts with no impulse or participation or aggression whatsoever. What worked best for you to improve on your execution? Higher trading frequency, trading first, like actually putting on the trade, and then reviewing after to see if there's a better entry that I could have taken. But it's much easier to analyze and improve your execution if you actually execute versus sitting out and coming up with 100 variables of what you could have done. How low do you go in time frame when searching for an entry while trading high time frame? Sometimes the 5 minute, but that tends to be only for like daily open strategies if I'm really insistent on looking at reactions to spikes. If I'm being a bit more reasonable, the hourly tends to have me covered. I don't look at the 10-year, no. Do you plan out your trades days, weeks in advance alongside upcoming narratives? No. What is your preferred time frame to trade? The daily. It just works. It just works. You get the benefit of trading higher time frames, but also it moves quickly enough to where you're not fucking waiting a week for something to close or something to print and this, that, and the other. The daily time frame, I think, is really good. I don't allocate any long-term holds now, but I probably should. What are your honest thoughts on fib extensions? I don't... okay, I was going to say I don't think they're particularly useful in some outlier market conditions, like when everything is absolutely nuts, setting new all-time highs, and there are no reference points whatsoever as far as resistance or levels go. They can be useful when people are just memeing targets because they have no idea where to sell. The market ends up at weird points where it comes to consensus because there's nothing else to sort of anchor your expectations on, and so more quirky tools become more mainstream. So in those rare circumstances, I think fib extensions can be cool, but as a core trading tool under most circumstances, I wouldn't give it much weight. Do you care about SEC drama? I mean, this part I care about. Gensler embarking on a midnight massacre in attempt to bring all of crypto under control. In the coming weeks, the SEC, NYDFS, and the USOCC will bring a myriad of enforcement actions against exchanges, banks, etc. I mean, mind you, this is Fox business, so like, yeah. But even crypto native commentators have pointed towards a suspiciously well-timed regulatory crackdown from a number of agencies. So, yeah. But I don't care about the drama as much as I care about the impact of the drama on price and what it does in terms of taking the market to levels that I think are important. Did you just check out that girl? No comment. Do you think traders have any responsibility to recycle some gains into real world value for other people? I'm not sure about the term responsibility. I think they should be encouraged. I think it's a good thing if they do, but responsibility, as long as they... I was going to use the T word, but we all know that's a taboo topic. And also, some of these countries, you pay your T word, and the misappropriation of funds and what it's used for isn't... You could argue against the utility of that, so... Transgender, no taxes. Right, we're certainly losing it. I know I am for a fact. Can you go to low time frame or the past higher time frame and tee up what a good RR trade would be and show the confluence? I mean, we've spoken about what that looked like. Go back earlier in the video. I read about a hidden bull div invalidation. Could you show and explain? How could I show it if it's hidden? Come on, let's be realistic. We're all going to make it? By definition, no. We talked about Sand and FET. I'm no interest in AI stuff, really. Right, I think I'm going to click off. Again, first and foremost, apologies for the lack of newsletter on Tuesday. Don is fighting off something particularly nasty, so no Wednesday stream either. Hopefully this serves as some form of reasonable replacement for Tuesday. Certainly not Wednesday. I can never hope to live up to that. But also Altcoin Thursday. We'll see if we do Casual Friday based on how the duck is feeling. So, you know, leave your good wishes in the comments and like the video so I can tell him, hey, people only liked it. Not because I had anything useful to say over the course of 2 hours, but because they wanted you to feel better. And that's what all we're here for, ultimately. But yeah, we'll try to make that happen. I hope everyone has a good week and stuff. You know, don't be idiots. It's like if you were caught off guard by this move and you ate shit on your portfolio, it's immediately tempting to try to make it back and recoup some of those losses. But I will note that the likelihood of unforced errors after being offsides on a move is very high. So you're your own worst enemy in these types of circumstances, unless you have very clear edges firing off as a result of this price action. Just take a breather, man. The market will be here tomorrow. Don't compound your mistakes, and you'll be better off for it. I hope you have a good night, a good week, all that type of stuff. Hopefully I haven't bored you to death. If you'd be so kind, if you do want to see more live streams, leave a comment on the YouTube video once it goes live on the channel as a recording, and then I'll trawl through those to see who the sick, perverted ones of you are. Anyway, goodbye.